Hey, good morning. Welcome to the Mortgage Rate Forecast with Scott Criss, your mortgage rates and news. It is April 5th, and let's get started with the reports. Pretty light day on the reports, guys. Jobless claims helped the market slightly. But it was kind of discounted. Jobless claims came out at about 242,000 versus 225, but it's likely just due to seasonal, just because of the spring break. So it's really being taken with a grain of salt, which when I get to the charts, you'll kind of see why. But tomorrow's big mover is going to be the jobs report. The jobs report, a lot of the analysts that are kind of rooting on the bonds are a little nervous of this. ADP came out Wednesday, this last Wednesday, and it was stronger than expected, and so that's just kind of pointing to like it could be a pretty strong jobs report, which is really going to be bad for bonds. So we're kind of moving forward with caution right now. Here's where we're at. Bonds are currently at about 102.44, and if you look at my mouse, you can see the green line here. Resistance is coming up above us at about 102.60, and support, in my opinion, is coming in about 101.90. So that being said, here's where we're at. We're at kind of the top end of our trading range, in my opinion, and but we're at least still trading flat. It wasn't like that cliff that we saw back in January. So really pretty good news for bonds, but we're being pretty cautious. To kind of quantify where things are at with as far as rates go, Freddie reported that the average rate in February was 4.33 at 0.6 points. That's when average trading was closer to about 102.90. Now trading is about 102.44, which is 45 cents difference. So it would be fair to say consumers definitely going to be paying more to try to get that same rate, likely more than a point. So that kind of shows you where we're at right now. As far as the forecast, my last projection was a hit, which makes me feel great. We're staying right in that trading range that I'm predicting. But moving ahead, I'm with all the analysts. Every single analyst I follow is saying, hey, it's probably going to be a pretty bearish market for mortgage-backed securities, meaning that they're probably going to get worse before they get better. So so here's going to be my projection for this coming week. As you can see, we're currently trading at 102.44. I believe we probably won't go any higher than 102.60. And I don't think we'll go any lower than 102.10. So what that means is we have probably a potential loss of a third of a point almost, or a potential gain of maybe a quarter of a point. But we have all of this pressure kind of pushing us down, guys. So my position with my clients right now is, if you like it, lock it. That's the safest thing to do. I think we're floating a little bit high on our trading range, and I think we have more room for failure than we have for gains. So anyway, that's it for this week. I am not going to be here next week, so my next recording will be in 2 weeks. But at any rate, going on a little vacation down to Arizona. So hey, we'd like to hear from you guys. Leave your comments down below if you have any questions or a specific scenario you'd like us to cover. Let me know. And gotta say, guys, don't forget to hit that like button before you leave. And if it's your first time on the channel, if you click on the guy at the top left over here, that will get you subscribed. And if none of this made sense to you and you're just trying to figure out the best time to lock in your interest rate and try to get the best mortgage rate you can, click on Mortgage Bonds 101 over here at the top right. Mortgage Bonds 101, that'll teach you the basics that you need to know when you're trying to get the best deal. Anyway, that's it for now, guys. We'll see you in a couple weeks. Take care. Bye-bye.